And so number one thing, buy the property. Number two thing, hold it for a long time, right? I mean, because it might not feel like much, but when you're compounding over 100 years or 200 years, and so what do all those four have in common? Well, they're all something you would want to hold for more than 100 years. And so what is Bitcoin? Bitcoin is the next frontier. We've already gone as far west as we can go. Now we have to go to cyberspace. I mean, eventually we'll go to outer space, but we're waiting for upgrades in propulsion to go to Mars and the asteroids. But between now and then, you go to cyberspace. And the real point is Chinese billionaires, Russian billionaires, African billionaires, South American billionaires, every company on the planet would rather have their money in the US, but they can't get it to the US. So where else can I put it? I can put it into the city of Bitcoin. I buy Bitcoin, I sell Africa, I sell Venezuela, I sell Russia, I sell Siberia, I sell China, I buy Bitcoin. Bitcoin is digital capital. Everybody wants it. Everybody knows about it. No one can steal it from you. And what's the use case? Well, the use case is to get rich or stay rich, which is like half of everything, right? The great irony is people can't figure out what it's good for. It's like for the last 10,000 years, people have been trying to figure out how to get money and keep it. What it's good for is the wealth that allows you to power your family, your country, your company.
Yeah, I saw in an article where you were suggesting Apple should buy $100 billion in Bitcoin. You said, Bill Gates, call me if you want to make the next trillion, meaning buy Bitcoin.
Yeah.
And then when I saw a number that just recently came out, is that Berkshire Hathaway, if I'm not mistaken, they're sitting on $325 billion of cash. $325 billion of cash where they're sitting at. If you, right there, $325 billion of cash, are any of these guys in communication with you? Have you spoken to Bill Gates or Warren Buffett or Tim Cook, any of them?
I mean, I speak to anybody about this in confidence, but that I never disclose what I say or that I spoke to them. But I do speak to a lot of mega billionaires and public companies about it. And I make a few points on this. One, that $320 billion, that is destroying $32 billion a year. They are destroying $3 billion a month in capital because they're generating a 3% after-tax yield at best, and the cost of capital is 15%. So take 12% negative real yield on that. That is the cost. Multiply $325 billion times 12%. That's what the shareholders are paying right now for that. The second point I make is, if you look at Microsoft, for example, 98.5% of the equity value of Microsoft is based on forward expectations of quarterly earnings. And 1.5% of the value of Microsoft is based upon tangible liquid assets. And another way to say it is Microsoft is 144 times levered to their quarterly earnings. If they earn $3 billion a quarter or X billion, whatever the number is a quarter, it's more than that, I guess. But you multiply it by 144x, right? And if they miss by $1 billion, it's 100.